Hello and welcome. Today is Sunday, the 14th day of December 2014. My name is Derek. Welcome to this weekend silver chart analysis video, taking a look at the daily and the weekly charts. So let's get started. We'll start within here, and when I talk about the steps needed for a reversal in trend, step number one, band flattening out, which happened in here. At this point, barely breaking resistance, but still looking to go higher. And these three red candles signify a lot. For the first one, I'm just stay in the sideways range. The second one, a correctionary move back to the 18 average of the band. So you're looking here, okay, find support, maybe go higher. That's what you're looking for, but that didn't happen. No, on the third session, decently sized red candle down, thus quickly from the support area heading much lower. That gives you the warning signs that this thing could have more significant downside action. And in fact, it did, going to the low 14s on this big volatile session, which is the fourth largest volatile day of the 21st century. And then regaining this 18 average, establishing resistance now. But what's interesting about this pattern is when you're looking for the signs of the failed moves, which oftentimes have the fast moves in the opposite direction. In this case, you have a fast move down in here, but it regains the band not only relatively quickly, but extremely quick. So the next step is relatively quicker after that to break above the 18 average band, which was the case. It took about a week or so, but here's where it broke above the band, and then as of now, the established resistance is barely above 1720. For the last few days, support and resistance in here, support has been about 17, resistance has been about 1720. So that's a 20-cent range, barely over 1%. So even if this thing needs to continue correcting sideways, most likely the volatility range is going to have to increase because the 20-cent range, quite frankly, is just too tight. As far as future resistance points I'll be looking towards, the next one on the breakout is the 38.2%, or excuse me, 61.8% Fibonacci retracement in at 1869. That is the next resistance field in which I'll be looking towards. Let's now change this to the weekly term time frame. And for the week, up 73 cents or 4.48%. after it was up 5.5% the previous week. And going back in here, support established. Now it's getting above the 18 average band, but where the support area was vital, it didn't go higher. Instead, it went lower in here. So it was showing signs of the failed breakout fast move. Now, it took a while, of course. The fast move to the downside came in here. But the more often support was tested, the more likely it's to be taken out. Well, what this means now is that this level in here, which is the 23.6 Fibonacci retracement at $19 per ounce, that's the area I'm looking for as resistance. But I'm going through the steps again. I've talked about it for quite some time. Step number one, flatten out, a couple weeks of staying in a range of the band, which is 1620, and really 17.5 going sideways within that range. The band will flatten out. Then establish resistance, and by far the probable resistance area is 19. So I'd be looking for a move to go to 19, which would then have this band slowly start to increase. I'd be looking for a move back to the band and then breaking the established resistance, and then I'll be stating that the next target level will be placed in at around $23 per ounce. And the Fibonacci retracement that I'm using is the $49.81 high from almost 4 years ago now, and the $14.16 lows in here. It has to hold and stay above this $23 level for the bear market to just come to a conclusion. This has got a long ways to go, in my view, before this thing is no longer dirt cheap. This thing could triple. Well, tripling 17 would be $51.09, which would be close to the 1980 all-time highs. But even at that, I'm looking at those prices as majorly depressed low prices, obviously more so now at $17 per ounce. And this is my opinion, although it's a calculated, educated opinion as well. So thank you for tuning in, and have yourself a magnificent week. Bye-bye.